Good morning, good morning. Happy Friday, everyone. Hey, Lake Show time. Good morning. Dano, aloha. Stealth. Hey, Cisco, aloha. My Hawaiians are up in the room. What's up, Ohana? Hey, Moran, Stealth, how you doing? Hey, Nate. Well, oh, it's Friday. Happy Friday. Well, let's see. The markets are working as nature intended. Hey, Shanghai, what's going on? How's everybody doing? Welcome, everybody, to Trading Syndicate. I am JJ, and our trading room is where real people make real money. That's our goal. Real people, real money. We want to just help regular normal people make a living. And when you don't make money, we want you to not lose all your money. What's up, Marcus? Thanks, brother. Hey, Cisco. Thank you. So, those of you who are watching on YouTube, come check us out. It's the best $20 you'll spend. Don't go to McDonald's. Don't go to Tim Hortons. Just for a day. We'll help you make some money and we'll help keep away type 2 diabetes. Oh, okay. It's Friday. I get to act a little weird. Okay, this market is still figuring out what it wants to do. Let's just talk about overnight inventory for one. Overnight inventory is almost 100% long because you can see there's the close of yesterday. And I would say 99% of all the trading is above yesterday's close. So overnight inventory is long. We're looking for a move down, okay, when London opens to correct that inventory. Currently, our short sellers who are short using yesterday's high as a stop, they're getting bought in here, right? So we want to see that volume point of control move up, okay? That's what we want to see. We want to see the volume point of control move up to show distribution. Now, it might happen if we've got the bullets. If we've got the customers coming in willing to pay over 68.94, then we'll move and distribute that volume. If not, we're going to come right back down, right? I mean, if this was RTH and we opened here, we'd open on a gap. We'd be outside the previous day's range, right? But so far what's going on is we took all of the cheap stuff that we bought yesterday, here and here, and we sold some of it here at night, and now we're selling it here at night. See? It's just commerce, my friends, right? It's just, as they say in the great Salt Lake City, right? As they say in Salt Lake City, it's just commerce, baby. It's just commerce, right? So overnight inventories log, we're looking for a move down. Now, let's address the elephant in the room. And that elephant is, where the hell are we going? What the hell are we doing? Right? We're looking for that rotation higher because we did a fail to get to 70.30, right? And we didn't take out 67.88. So what's the deal, right? As the song says, what's the story, Morning Glory? Right? You know, as the great band from Manchester said, what's the story, Morning Glory? Well, we usually get a sharper move to the upside. We've got sellers, right? Well, actually, we've got a lack of buying. We've got a lack of buying because all the AI heads are trying to figure out who hates everybody and what company is going to get destroyed. And that's being reflected in the chart. Remember I said a while ago that when you're in doubt, the chart's going to tell you what the business is doing, right? More than order books or talking heads, because the chart actually represents the transactions of the people who are actually putting their money where their mouth is. And right now, those people aren't really aggressively buying, nor are they aggressively selling. So it's all kind of like, what the hell's going to happen? So what happens is when you get winds of change in the macro world, those people move slow. They're not day traders, right? If you have $60 billion, if you have $800 billion to put to work, you move slowly. You don't day trade, right? Right? So people who manage money, people who manage wealth, they don't day trade. They're not like, ooh, hit the Red Bull, right? And start hitting bids. They have analysts, they look at things, they do models, they do all this sort of stuff. And that takes time. So that's what you're seeing now in these charts. The you're seeing the effect of time. Time means sideways. So we might actually build a new balance zone here while we wait. Because we're not doing this and we're not doing this right away. Right? Do you guys feel me? Do you understand what I'm saying? The chart is your best friend. All you need to do is trust the chart. Okay? You need to trust the chart. Because the chart's telling you, hold your horses. Right? Right? The chart's telling you that the big money players are kind of like letting this thing go sideways. The speculators are making decent money. The ranges are kind of getting a little smaller. You notice? Big range, big range. Now the ranges are getting smaller. What does that mean? Remember in a candle chart, in a 1-minute candle chart, when I show you guys, when the candles get smaller, what does that mean? Business is getting slower. Here, business is getting slower, just like it did here. You guys see, like this is the same move as this. You see this? The same thing happens. We're just kind of going sideways, a little bit of distribution, right? They're buying here, they're selling here. They're buying here, they're selling here, right? Sideways business, right? The market is waiting for information, right? If you are short on this inventory correction, your sellers are here, here, and here. Right? And I'd be looking for bids down at 69, 68, 90. Cisco, I'm sure you are short, brother. Right? Now, shorting away from an edge is tough for a new trader. But I'm going to give you a little clue, and that is when you see those candles and that top, you see the sellers are moving down. Right? This is like if we were in Hawaii and we were like, you know, waiting at the shrimp truck. At the end of the day, they got to put the shrimp on sale. Right? And now we're coming down into that. Oh, where's the previous day high? Sorry, folks. 1 sec. See, now we're back inside the previous day's range, and we're looking to correct inventory down to the close, which is at 92, right? Yesterday's close is 92, right? There's yesterday's high, there's the overnight high. So you could see it on a half hour. The sellers were here, then they moved here, then they moved here. See? And that's what you need when you're a short seller. You need those sellers lowering price. Exactly, Dano. Exactly. Exactly. When business is slow after a big sell-off, can we expect a big short squeeze? Yes, we can. We're not getting one right now. We're not getting one. So what did I say, Neela? We are waiting for information. So close your eyes and pretend that you were trading. Let's say, you had a small fund and you've got maybe 1.4 billion, 1.5 billion under management, and you've got 200 million of that for speculative use. Are you going to, how are you going to trade this? Right? What you'll do is you'll have a core position if you're short or you're long, and you'll trade around it. Right? Now the thing is, what we expect usually happens is after a big sell-off, we usually squeeze it right back up, right? And everybody gets trapped and the shorts push price higher. We're not getting that this time, and that's because the winds of macro change are blowing through the caverns of Wall Street. But we don't know what's going to happen. The other thing is, it's a new year and we have to reset the cost basis, right? It's taking time. There you go, time. That's the factor of time. You see, because if you have $1 billion under management, right? Well, we don't know yet, Aaron. We could be trapping shorts, but if we get a bunch of bad macro news out, right? If we get a bunch of bad macro news out, the shorts will just drop their bids and the market will go back down to 67.88. So it's great to theorize, but right now, what we do as retail traders is just trade the back and forth ranges of what we're given. Now, for investors, it's a little harder, right? And that's why investors dollar cost average and all of that stuff, and they put away a little bit of money every month and invest, right? No matter where the market is, your 401k, your IRA, all that stuff just gets automatically invested. And there's a lot of news today, isn't there? Oh my God, look at that. It's frickin' CNN. Right? Yeah, they're waiting for clarity. There you go, Rocky. We're waiting for that AI clarity, right? It could be nothing. It could be, I don't know. Now I'm watching, I was watching, there's these guys that I watch at Invest Answers, and they seem to kind of know what's going on. But all these people, the AI guys are doing well. They're raising money, like people are throwing money at them like crazy, right? Let's see what happens, right? In the meantime, we can make a little bit of money shorting here, buying here, shorting here, a little back and forth, right? We can make our daily bread, right? So we just found the bid here, right? We looked below the previous day high and came back up. So they're going to continue to distribute. So the shorts now just showed you their hand, right? So Aaron, you said trapping shorts. So on our time frame now, the shorts are trapped under 93. How do you know that? Because the low of this half-hour bar, the low of that candle is right at 93. So there are a bunch of big buy orders or sizable buy orders here, and the market came down, saw those buy orders, and went, no, you're going to have to pay more, and let's see if those buyers follow us up. We'll be looking at the top of K and J period, right? And see if those sellers step in where the white lines are. Right? So that's how we look at a market. That's how we dissect a market, and If you're building a short position here, right? So say you're a large trader and you're building a short position, right? Well, these are your warning levels, right? If you have a bigger account, if we take out that offer and we take out that offer, those are your warning levels. And then 68.99, that's where the pressure starts getting on. Your stop will be here, right? Now, if you're feeling really, really adventurous, you can use 69.01 and a half as your stop, right? If you are Daddy Warbucks, right? So we came to 96 just now. Boom, the seller stepped in, right? Beautiful, right? So if you're short 96, 95, right? I'll go put some buy orders underneath just to see if I can get filled, right? And if I can get filled, right, because I shorted 4 contracts at 95.63, and bought back, I've just bought back, what did I short? 5 or 6? God, I'm old. I bought back a few at 94 and a quarter, 95 and a quarter. I got a 93 and 3/4 bid, right? I got filled at 93 and 3/4, 94. I got one left, and I'm going to move my buy limit up to 93 and 3/4 and see if I get any love there. If I don't, I'm just going to move it up to 94 and I'm covered. So that's just a little quick, just a little test short, right? Just a little, me, I like to put my toes in the sand and see what's, as they say in Canada, what do they got in the tickle trunk, right? So now the sellers were here, 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 right? And this is the simplest, cheapest way to short. Because what you want to do is you don't want to short this. This is the front side of the move. This side of the move is for longs to sell their stock or their ES contracts into. Once you identify a seller, right, that's when you can lay on the short. That's the backside of the move, right? Everybody loses money shorting because they try and short and call the top. Let the size traders put the top in and then tell you, hey, bub, we're putting this on sale, right? And that's why when I short, I go and put my buy orders in because I know that there's a bid down here, so I'm going to front run that bid. Everything we do is tactical, and it's simple, and there's no complexity in this, right? Exactly, right? You got to be on the backside of this. How much time did it take you to execute these trades? I don't know, less than 30 seconds? You see, Rocky, you got to remember, I'm not a retail trader. I am now, but I've been on a trade desk where, let's say 1996, there were no algos, there was no electronic trading. You had to call a market maker and put the trade in for your client. So you had to answer the phone in 30 seconds on the first ring and execute a phone trade in 30 seconds or less. Otherwise, the only job you get at the brokerage firm is cleaning the toilets. So you got to be fast. So if you want to increase your speed, you got to work on the software, right? When I started retail, I sucked. I sucked when I started retail because it was a new market, right? The DOM is different than a level 2, right? Because when I work deals, I use a software called DAS Trader, right? Which allows you to control market makers and put orders all out. But ES was a completely different animal. So you spend time, and what you do is you put in a bid and then you put in the stop. And then when that bid gets hit, you throw out your sell orders. You put in your sell order when you're short and you put in your stop. And as soon as that sell order gets executed, you go put your buy orders in. So you're not moving your stops around, you're not running around chasing stuff. And you practice, right? You put in that key sequence, just like a pilot practices in a simulator, you practice on the simulator on your software. Know what I mean? It's not rocket science, it's repetition. right? It's like Michael Jordan doing the 1,000 free throws, right? It's just repetition, repetition, right? Where retail trading, the the trick to retail trading is discipline and repetition. All the stuff I hated when I was a kid, right? Discipline, repetition, practice, all of that stuff is what saves me now. All the stuff I hated is what made me good at this. And so I started retail trading at the age of 45, right? And it was very difficult because I had no discipline. I had no trade setup. People would ask me all the time, you talk to retail traders, they go, "Hey, what's your favorite setup?" And I'd go, "Oh, the FBI agent posing as a fund manager." And they'd be like, "What the hell are you talking about?" Like, that's my favorite setup, right? It happens all the time, right? FBI goes in, poses as a fund manager, talks to a shady public company or financier. They cut a shady deal and then they arrest the finance guy, right? That's the number one setup in the world. FBI pretending to be a fund manager, right? So people would go, "No, no, your trade setup." I'm like, "I don't know, man. Just." And so it was really difficult, right? And that was the hardest thing for me, right? Was to get that discipline. So I have a 5-step methodology. Every morning I do the same thing. You guys see me do it when you come on with us. I go and show you where the inventory is. I do my balance levels, right? It's the same thing. It's just like when a baker goes into the bakery and bakes bread, right? It's the same thing every day. It's boring to a lot of people, but you got to embrace that boredom. And when you do, you'll find that stuff that you do every day, it saves you because you only take trades when the trades make business sense, right? I'll freely admit, yeah, now we're going to come down. The time point of control is here at 89. VWAP is at 88 and change. So that's that inventory correction that we're looking for. London hasn't even opened yet. So let's see if we can get down and tickle the ivories here in the 89s. That would be a good place to cover if you're short. There you go, Cisco. Nice. Way to hold them, right? So it's doing the trade 1,000 times, right? I've practiced that look below and fail on the simulator at least 1,000 times before I took it live. So I can basically trade with my eyes closed because I know where the levels are on the DOM, and I know where to put the trades, right, and put the stops automatically. Like Rocky, if I said to you, right, if I said to you 68.90 bid, 68.89 quarter stop, those orders should be in by the time I finish talking. Hey Steve, I trade the ES, which is the S&P E-mini futures. It's a 23-hour market, and right. So if I go Rocky, 68.86 bid, 68.85 three-quarter stop, those orders should be in. By the time I'm finished taking a breath, you should have those orders in, right? Everybody always, when I first started doing this, they're like, "JJ, you trade too fast." I'm like, "Well, what's the use of being a slow trader?" Right? A slow trader is useless as tits on a bull. Excuse my language, right? Being a slow trader is not financially. I mean, if you're a fund manager and you're building a position, you have an executing trader. But your executing trader is not slow, right? If you're swing trading, sure. But what I mean, I don't want you in and out of trades like doing 100 trades a day, but I want you to be able to execute ruthlessly when your setup shows itself. You got to get in there and just boom, right? Without hesitation. That's why a lot of you guys will kind of screw around. You know, you'll be trading the middle and you'll go long, you'll go short. You're not developing any skill. You need to develop your skill, right? You need to develop your skill. I cannot say that enough. The level of skill has to see, you can see, look at this. Simple stuff. Steve, if you're just joining us, welcome. You could use this if you're trading equities, whatever. Look at the top of those 3 or 4 candles. That's where the sellers are. So you mark it. Do you see how the offer just went above it, but nobody bought it? Right? So nobody wanted to buy 92, right? The bid just dropped, right? The bid moved up. But watch that offer. It just stayed still, right? We're 91 3/4 offer. Boom, there we go. We got a buyer. So we raise the offer. Boom, they take it. Now let's see if we can go to 92 1/4. Or if they offer back under 91 3/4. If you guys watch this when it's slow, you will understand the mechanics of order flow better than anyone with a BS order flow chart, with a BS footprint chart, with anything. That little red line is the best trading indicator you have because it tells you where the sellers are pricing their product according to the buyers coming in the market. So if they're buyers, they will raise price. If they run out of buyers, the sellers will lower price to get rid of their inventory. And Globex is the best time to learn because the market's slow, right? The other thing you should be doing is you should be rewinding your charts every day and making notes to show where things went well, things went wrong. You can see things. The subtleties are what you guys miss, and that's what I missed for the first years until I was lucky because after my heart attack and after my divorce, I had to go back to a place called Saskatchewan where I grew up to look after my mom before she passed away. And those 4 or 5 years I was with her, you know, I would sit and I would watch the market for 18 hours a day. I would sit and watch these charts religiously, right? And I was lucky that I had still some clients who were doing some deals. And so I had a couple of monitors. On one monitor, I'd have their stocks. I'd watch their stocks for them, right, and help them trade out some paper. And then on the other monitor, I'd have these TPO charts, and I'd sit and watch. And I've seen every Jim Dalton video 3 or 4 times, maybe even 20 times, right? And Resnicek videos. And I used to watch them religiously. But they don't tell you where to take the trade. They don't tell you they don't tell you the simple stuff. So I had to figure out, how do I make this practical? Right? How do I make it practical the way it used to be in the old days? And that's the offer. Now you see London's opening, right? And London can't get any lower. There should be a seller here at 94. If there isn't, that means London is short covering and there's buyers coming in. You see? Now let's see if we can stay above yesterday's high or if we suck back down underneath it. See what I mean? This is tactical information that you can use, right? So everything we do in our trading room at Trading Syndicate is practical. There's no BS. There's no fake indicators. There's no mumbo jumbo. We don't tell you it's an art, not a science. We tell you where to take the trade. Why? Because it makes sense in a business reason. There's a business reason to take the trade. Here was a beautiful look below and fail. So you'd be long, you'd put your stop here, and you'd sell into this strength. Right? This is a look below and fail. It's our favorite trade. Nice work. Way to go, Ian. Well done. Right? So very simple trades. Trades that make sense. Nice work, Dano. Beautiful. Way to go, Dave. See, we had 3 guys in our room who caught that trade, right? The reason is, what's the business reason? The sell orders that took the market under 91 are complete. Boom, boom. Right? There's no such thing as unfinished business for you footprint traders. Unfinished business means that you need to go to the bathroom and you should have some prune juice. Okay, the business is finished under 91. The market rotates up. You grab some supply, put your stop here, because if somebody offers the product under 90 and a half, your inventory is not intelligently priced, so you bail. Got it? So you're long here, your stop is here. You know that there are sellers, so you sell into that strength. Simple, common sense business. Right? And you practice it 1,000 times over and over and over again. Right? It's a simple business. It's not an easy one. And then right now, the way what it's doing here, just leave it alone. We only trade at an edge or when we see a seller, and that seller is moving lower, right? But if you're a new trader, you should only be trading at this edge or at that edge until you understand the subtleties of the market. The previous day high does not count the high at the overnight session. No, Howard. You know that. We always look at yesterday's high. RTH, Howard. Right? Always remember RTH. Okay? Always RTH. You know why, Howard? Because we want you to keep the amount of information that you look at to a minimum. Right? So right now, right, I took that little short. These guys took the little long. Right now, it's going back and forth, and it's just going to go back and forth here. There are longs trapped up here. They're coming here. We found that the shorts are bid at 90. They front ran VWAP. Right? So that's where the bid is in Globex on the London Open. Right? You always need to know where the bid is, ladies and gentlemen, because if you don't know where the bid is, how are you going to make any money? Right? If you are a trader, you need to know where the buyers are and where the sellers are in the market that you're trying to do business in. And that's what we teach you in a very simple way, because the 1-minute candle chart shows you exactly where all the sellers are, and it shows you where they stop selling. How's that? Doesn't get any more simple. All you need to do is learn how to see it. Once you see it, then you learn how to execute around it. Now, those are the two things that take time, right? They take time, right? And they take, they take discipline, because you need to sit and watch and watch and watch, and not just be hunting for a trade. Because when you're hunting for a trade, you're going to get into trouble. Right? Hunting for a trade is a desperation move. How do you determine the cost basis? You could use a distribution cost basis, or you could use an accumulation cost basis. Right? So if you came into our room, right? If you came into our room, we have numerous videos on how to do that, and I show you how to do that all the time. Next week, we are going to start our execution classes again. And so we teach you, we have a 5-step method. So if you came into our room, you'll come in and we'll teach you that method. And you do the same thing every day, it becomes like breathing. Right? Now the thing about these markets are, you could use an accumulation or a distribution cost basis, and they'll work just as well. And the reason why is because it's the same inventory. So the business is always the same. Take it and sell it higher. When nobody wants to buy it, you put it on sale and it comes back to cost basis. So you could use accumulation or distribution, and you'll find your cost basis areas because we're doing the same business. It's not like in the morning we're running a coffee shop, in the afternoon we're selling tires, and at night we're running a beauty supply store, right? We're doing the same business every day, day in and day out, day in and day out. That's why my larger, longer term levels work pretty much within a couple of, maybe a point, right? I've got levels from April of 2020 that are now 6 years old that still are accurate to within one ES point. Through contract rollover, through COVID, through Mr. Trump's day of reckoning, through all of those things, the levels work like a charm because the business never changes. And once you realize the business never changes, that is an edge you will have like no other. Because while everybody else is out there pontificating, you just zone in on the chart, and the chart tells you the nature of the transactions, and the transactions tell you what the participants in that market are doing. Make sense? So you could use this as a cost basis, right? Check this out. So all you need is the chart, right? I read the Wall Street Journal and Bloomberg for gossip, right? Back and forth. That's all. You take that, double it to the downside, double it to the upside, you'll see it works to the tick, right? It's the same business. The chart is all you need. I read the Wall Street Journal and I read Bloomberg because I want to know who started a new fund. You know, there was some guy last year who made $16 billion in his fund, right? What's going on in the business? Because I used to work in the business. So it's like when Hollywood people read, what is it, Variety magazine, or what is it the Hollywood people read? Right, the Wall Street Journal. I've been reading the journal since 1992. Nice work, Dave. Good stuff, Cisco. Let's see if we can go tickle VWAP at 88. Let's see. I think that K bid will drop. What you do, Raghu, is you just start drawing cost basis zones. If you were in my trading room, right, you would draw a zone and send it to me, and I'd tell you whether it's good or bad. That's what most of my folks do. 92 is not bad trade location, brother. It's because it's offering under 91 now, AZS. Let's go take out that. There we go. There we go. Sell them like you stole them. I'm looking for 89 bids. I think they're going to front run VWAP again. Let's see by how much. There's 89 and a half. Oh, there's the bid. Hello. Let's see where they sell into it now. Yeah, they're going to front run VWAP. On a slow night, Cisco, right, you could pretty much guarantee that they're going to front run VWAP on the way down, right, because they got to cover size, right? See, large traders, right, large traders, they're not going to put their orders right at VWAP because they know that there's competition, right? So if Cisco's got to buy 500 contracts and AZS has to buy 300 and Dave has to buy 200 and I have to buy 800, well, guess what? We're going to be front running VWAP to get that cheap paper or, that cheap product. So large traders cover where they can, not where they want to. And that is a truth in markets that retail doesn't know because retail's never traded size. But if you have to buy back 500 contracts, trust and believe that there are other people who have to buy the same amount, and they're going to be competing with you. So there's the front run of VWAP. I was thinking 89. What did we get down to? 89.5? So we're close. Right? Now they're going to sell into it somewhere again because we've got some trap longs above. And let's see if we could get back above the close. Right? If we could get back above the close, it means the sellers have seen buyers and they're raising price. If we can't get back above the close, it means that they're lowering price because they want to get rid of their inventory and we're running out of buyers. Right? There is a reason why everything happens in markets. There is nothing that is random. You know what's random in markets? We are random. Right? Because retail doesn't know what they're doing, so they're the random element. Everybody else knows what they're doing. Right? You know what? I was asleep yesterday during M period. I fell asleep. Sorry, Dado. I crashed so early. Oh my goodness. Because I was running around to doctor's appointments. I got to go again and return this stupid monitor they got taped to my chest. So I got to run out again this morning. So I was like, right, I fell asleep. I think I was asleep by L period. I sat on the couch and I was like, okay, I'm just gonna just chill for a moment. And I woke up and it was like the close and I was like, oh, rats. Okay. Ugh, getting old. Yeah, I'm just a year ahead of you there, Phil. So now see how this is that negotiation. That's true, Dano. Right? So the candles are starting to get a little smaller. We're going back and forth over 91. We're waiting for some more people to come into the store, right? So we had a decent up move. We had a decent inventory correction. Let's see. If you're long, if you're doing the look below and fail again of 91, there might be a bit more sellers this time than there were last time. Yeah, there they are. So sometimes you got to let the market sort of do its thing, right? And that's why people are always telling you to be patient. But traders hate being told to be patient. So what I do is I tell traders, hey, be smart. Don't be patient. To hell with patience. Be smart, right? Because if you're smart, you'll be patient. Because you'll be stalking your trade. So now we got a seller at 92. Let's see if we can get a 92 and a quarter print. Aha, not yet. You see those two green candles and the red one next to it all have the same high. Because that's where the sellers are initiating, right? They initiate there because there's competition. The top of the candles are where the sellers initiate. That's why I mark them on the way down, so we know on the way back up where there's going to be a resistance, right? That's where we're going to have that resistance. So now we just let them work this out. We never did move the point of control above the yesterday's high, did we? It's still down there at 87 and a quarter. Yeah, patience is people hate being told to be patient. They hate it. As soon as I tell people to be patient, they go and put in a trade. So I try to appeal to your ego and I go, hey, be smart. And you're like, oh, what does he mean? Right? Be smart. So the top of the candle is where the sellers are. right? Now, how do I know that? Because I used to be the seller. Exactly. And you shouldn't be patient in cutting losses. Exactly, Phil. Right? And that's what we teach you, like especially in my mentoring program, I train you how to execute, right? And so when you're in a trade and it starts going wrong, your first instinct is to get out. And that has to be trained. Because what happens is when people are in a trade and it's not going the right way, they freeze. So how would you like it if you were flying in a plane and the pilot comes on the air and goes, "Hey folks, we're going to be hitting some turbulence. I don't really know what to do, so I'm just going to go read the book. You might want to hang on." That doesn't really instill confidence, does it? That's why they're trained, right? They are trained to react. And that's what you need to be when you're trading. You need to be trained to react, right? Yeah, and the more boring trading is, the more money you're going to make, right? So that's what we do. We train you how to react. The other thing we train you to do is not trade in the middle. We also teach you, like, when the market's doing this, just leave that crap alone, right? Most traders, what happens is they don't know where to take the trade. They don't know why they're taking the trade. And they don't understand the business conditions that lead to a good trade, right? I would not touch this right now at all, Moran. I would not touch this at all. If I wasn't on the phone, if I wasn't on YouTube with you guys, I would get up and walk away and go to the gym. I would not be looking to buy 92 because I know there's sellers at 93 and I know there's sellers at 94. So there's not much upside just yet because it's 3 in the morning in New York and it's kind of slow and the candles are telling me that it might go, right? You might be right on that 92 quarter, right? Let's see. You might be right. But right now, I don't have a lot of faith in this order flow because the market's telling me it's kind of slow. I could be wrong. Wouldn't be the first time, right? Let's see if we can get a 92 and a quarter print. They're offered. Boom, there's the print. I want to see that offer lift to half. Now, what you could do is if you were building a 91 to 92 position, right, and maybe you were long 5 contracts between 91 and 92, I'd put some offers out and see if anyone takes them, right? And your risk is 91. Let's see. If you're long, I hope I'm wrong. Now we got a seller at 92 half. Right? Lately in this market, I take maybe 3 trades a day. Right? And they got to count. There's the seller. Just needs more time to clean out because it's slow. That's all. It's just slow. Good stuff, Stano. Thank you. We'll check in the morning. whenever you have time. I'll take a point, right? And that's a smart way to go, AZS, because you saw it going the wrong way and you got out. See, AZS has trained himself over time that when that trade's not working, he's not hoping and wishing and praying it goes to 94 because he clearly saw that there was a seller at 92 quarter, right? And Moran, that's why I didn't want to go long. Right? And for larger traders like Cisco, if you see that there's still a seller, you could stay short. It takes a lot of nerve, but it's not really nerve, it's actually understanding of the order flow. Boom, there's VWAP. Right? So if I was short 95, 96, right, I'd definitely cover at least half of my position at VWAP, and then I'd put bids down here. We're looking for 85 and 3/4 as a target, which is just right here. We took these lower stops, so that should create a little bit of selling. The overnight point of control is right here at 87. We might slow down here for just a second, catch a bid, and now what you want to do is when it liquidates, we want to see where the next sellers are. We know there's going to be sellers at 90. Do those 90 sellers step down and sell the 89s? Right? Yeah, I did not see the case for a long at all at 91. Why? Because I saw a constant seller at 92. And I know as a seller, if I'm selling 92, 92, 92, eventually one of us is going to undercut each other and go 91 and a half. And that's exactly what happened. See what I mean? Do you guys understand what I'm talking about? The reason why I was against the long here is because seller, 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 seller. They let it breathe for 30 seconds and that sucked everybody in, right? But eventually what happens is if four of us are sitting here, one of us is going to start undercutting. And then when we do, I will hit those bids all the way down to get rid of my inventory. Because you know why? Our cost basis is here. From yesterday is 67, 68, 77 and a quarter. This is what we paid for this crap. So we could sell it all the way back down here and still profit, right? So we looked under VWAP. We came back up because that's where the size traders are waiting like hungry dogs for product. Right at the overnight point of control, right back to cost basis. Right now they're going to sell into it. They sold into it right there before 91. Right? VWAP is a great place to get out of trades if you're short. On the way up, it's a great place to get out of trades if you're long. When you see a constant seller over a time period, right, at a slow time in the market, you know that someone's going to jump the gun. Because if I'm selling 92 and AZS and Cisco and Moran and everyone's sitting there, Dave, they're all selling 92, and Cisco goes 91 and 3/4, I'm going to hit those bids so fast it makes your head spin. Because I know everyone's going to lower their offer. So I want to take this, I want to make the sale before everybody else does, and that's what drove the price from 91 down to 88. When we're done this video, if you don't understand what I'm talking about, rewind that, because that is practical, tactical information that you can use. Now let's see if those bastards are still there at 92. Watch the offer, watch the red line, and watch that white line at 92. See how the offer is moving lower? They're front running 92. Aha. See? If you spend some time, just put the bid-ask indicator on, watch the ask, draw a line, watch the market go above and below that line in chop. You will learn more than looking at a footprint chart, whatever kind of balloon bubble charts you guys look at. It's actual information you can use. So right now my bias long term is sideways. Right? Sideways until we get some more information, until the analysts start telling the fund managers, buy this, don't buy that, get rid of this position. That's going to take some time. So we just chill out and we just trade the edges. You know what I mean? We don't have to, let's see, 92, there's 92. Oh, it offered and moved back. Let's see if we get a 92 quarter print. Oh, okay. Now let's see, can we get a 92 and 3/4 print? Not just yet. Now, did that flush take out enough sellers that we could get back up to 94? Let's see. Do you guys understand now the mechanics of trading? Because what you just learned in this hour are exactly the mechanics of how order flow comes in and interacts with inventory, and how sellers compete with each other, right? So all those stupid idiot sayings like buyers and sellers are fighting, right? That's all BS, right? It's like you going into Walmart to buy some bread and the guy who's working at Walmart pulls a knife on you. When have you ever had that happen? Buyers and sellers don't fight each other. That is the most stupid thing I've ever heard in markets, right? The other stupid thing I've heard of is buyers are in control when price is going up. Why in God's name would you want to pay more? That means you're not in control. You're being forced to pay more, right? So when you hear these things, ladies and gentlemen, don't fall for the BS, right? Use your brain, think practically, and think like a business person so you don't get sucked into all these stupid sayings. Now we're starting to raise price. That flush kind of cleaned out those 92 sellers, and now we're going higher. Would I have gone long? Probably not. I might have missed this trade. Like, to be honest, right now, I'm done. I'm going to go hit the gym. So I'm not going to trade right now. So I would have missed this trade, to be perfectly honest with you guys. Right? But generally, after a nice big flush down to VWAP, you get a nice move back up. I was just hesitant. Right? That's okay. There'll be other trades. There should be a seller up here at yesterday's high. There they are. All right, folks. Thank you so much. Come visit us at the Trading Syndicate. It's only 19 bucks. If you want to learn how to do this, make some money, and not lose money every day, we'll teach you. Have a wonderful morning. We'll see you at 9 a.m. Eastern Time, which is 2 p.m. in the UK. Trade safe out there, and if you have any questions, reach out. Appreciate you guys. Thanks for being with me. Have a wonderful morning. Bye for now.